What's up, traders? Welcome to another live market analysis with me, Tumelo. Now, today, I'm going to quickly go over a trade which I'm currently in at the moment and briefly explain why I got into the trade so that hopefully you can learn a thing or two and apply it into your trading in the future. Please remember though that this is not financial advice, but purely for educational purposes so that hopefully you can take the tips that you learn in these videos and apply them into your trading so that you can become better, consistent, and profitable traders. Let's jump straight into the charts and see what we have going over here. Now, I'm currently short USD ZAR at the moment, and I'm patiently waiting for the price to get to my take profit level so that I could happily collect these pips and cash in that money. Now, the reason why I got into this trade and the reason why I sold $ZAR at this point was because of a few indicators and alarm bells which I saw in the market in this move over here. All right, now let's jump straight into it and see what I'm talking about. The first indicator is this big bullish candle that we see on the charts. Now, at that specific point in time, this was a big, fast move. It was a big, fast move which was supported by news. Now, what was the news at this moment? At this moment in time, the news, unfortunately, was that our ex-finance minister was sacked by our president. Now, when this happened, it was clear that the market reacted to this and that the market sentiment was clearly changing and that the rand was starting to weaken and we had a bullish market sentiment for the USD ZAR at this point in time. But now, as a trader, when you see a big fast move in the market, you don't want to jump in straight away because generally big fast moves tend to be false moves and you would rather want to wait for other indicators to confirm that move for you in order for you to follow the move in that price. So this was the first indicator for me, was this big bullish candle which was supported by the news, which was that our president sacked our ex-finance minister. Now, the second indicator for me, which was actually an alarm bell for me, was the volume. Yes, it was the volume. Now, volume for me is, volume gives me more information to the price action. Volume basically tells me what the level of buying and selling activity was at a specific point in time in the market. Now, I'm just going to quickly plot these lines over here. Now, where I'm plotting these lines is basically where the volume for me was an indicator as to what was actually going on in this move at this point in time. Okay, so what we see over here, we have plotted these lines, is that we see high levels of volume. High levels of volume, but where the high levels of volume are was very interesting for me. So we see high levels of volumes in the dips and in the pullbacks in this bullish move. So we see high levels of volume in the dips and pullbacks in the bullish move. Now what this told me was that the banks were in this move and that the banks were getting ready to sell. Yes, the banks were getting ready to sell. Now, in order for the banks to achieve their objective, which was for them to sell, they need to induce retail traders and encourage traders to buy, so that when price gets to the specific price level or the specific target price where the banks want to sell, that they ensure they have an equal amount of willing buyers in the market at that same point in time in order for the banks to fulfill the objectives. So I saw where the volume was, and I knew that the banks were getting ready to sell. So you can see over here that the banks were slowly building up the bullish momentum in order to build the buying sentiment and the bullish sentiment, so that they could encourage retail traders to buy in order for them to gather up the orders for them to sell back to the market. And we see here that the bullish momentum is slowly building up. And then the third indicator for me was when price started to trade in this range over here. So price enters into this range and starts to trade in this range, and this told me three things. The first thing this told me was that at the top of this bullish trend, right? At the top of this bullish trend, retail traders have seen price move up significantly for a significant period of time, and they are convinced that the market is going to continue to rise. We see over here price slowly building up. We see the first push up over here, supported by the high level of volume at the dip. We see the second push over here, supported by high levels of volume at the pullback. And we see the third level of push over here, supported by the high volumes at the pullbacks in this move. So traders have seen the market move up for a significant period of time and are convinced that this is the point where they need to get in, and the market is going to continue to move up. The second thing that this tells me over here is that the buyers who are actually participating in this bullish move are getting ready to close their positions and take their profits, right? So the buyers who were participating in this initial bullish move over here are closing their positions and are starting to take their profits. And the third thing is that the banks have paused and are getting ready to sell. Yes, the banks have paused and are getting ready to reverse and getting ready to sell. Now, they're getting ready to reverse, getting ready to sell, and at that point in time, they've got their victims. Now, who are the victims? The victims are the amateur excited retail traders that have seen the price move up and are eager to jump in the market because of FOMO. They've seen price move up significantly for a significant period of time and are ready to jump in because they want a piece of the cake. So the banks are getting ready to reverse. They've got their victims who are the amateur excited retail traders who are willing to buy from them. And unfortunately, as you can see over here, these traders did not have the sufficient momentum to continue to move the price higher and to move the market higher. And you can see that at this point over here, the buying pressure was starting to weaken. The buying pressure starting to weaken, and this is where I was getting ready to sell. I was waiting for my confirming indicator to sell. Now, what was my confirmation to sell? It was right here at this point in time. At this point in time, I was getting ready to sell. Now, why was I getting ready to sell? Was because of this bar right over here. All right, so what we see is the buying pressure has started to weaken. The amateur traders, the amateur excited traders don't have the sufficient momentum to continue to move the market higher. And then we have this candle right over here. Now, what does this candle tell us? Now, at some point in time, this was a full bullish green candle over here. So we had a sharp increase in price, which was also supported by high volume. We had a sharp increase in price supported by high volume, but what we can see here is that the buyers failed to push price up. The buyers failed to push price up, and the market was resistant to higher prices. The market was becoming resistant to higher prices, and as you can see by the close of this candle, that the buyers failed to push price up, and that it was clear that the sellers were slowly starting to gain control. And we could see over here that the market sentiment was slowly beginning to change, and this was an indicator and a confirming indicator for me to go short and to sell at this point in time. And as you can see, price started to move down. So there it is, guys. It's very simple. It's all about the smart money and the smart trader following the smart money. Because as a smart trader, you want to see what the banks are doing, for the simple fact that whatever the banks are doing, the smart trader wants to do and follow as well. Because the banks are highly likely to have a better understanding of where the market is likely to go next in the future. So as a smart trader, it's very simple. You look what the banks are doing and you simply follow. And yes, guys, the clues are in the charts. You just need to look out for the clues. You need to be patient, and you need to be a smart trader. And what I mean by that is, when everyone else is buying, you should be getting ready to sell. The smart trader stays ready. So when you see the market is moving up, you are confident to take the opposite side of the trade, because the smart trader simply knows where the smart money is and what the smart money is doing. So there it is, guys. I hope you've learned a thing or two from this, and hopefully you can apply this into your trading, so that next time when all your trader friends are getting ready to buy, they're getting excited to buy, you know, the rand is weakening, the finance minister is being sacked, let's all buy the $ZAR and be excited about the whole thing. You, as a smart trader, you simply look where the smart money is, and you see what the smart money is doing, and you follow what the banks are doing, because you know that with high probability, if you follow what the banks are doing, there's a high chance of you to make decent money in this market. Well, there it is, guys. Hopefully this trade will hit my take profit and I collect those pips. But I hope to see you in the next video. Alright, happy pip collecting, guys.